All right. Well, I want to welcome everybody for hopping on. Right. Um. Basically, I've been giving this a lot of thought, right? And we want to start this off as a discussion. So I will allow the if you ever need to unmute your mic to ask a question or anything, you could do that. But what I have for today and what I have planned for today is I want to go over the trading plan and the trading psychology plan before we get into the actual strategy. And then I also want to go over the risk management plan, right? Before we get into the actual strategy. Because we all know you could be the best trader in the world and you could have the best strategy in the world, but how you execute on that strategy is what's going to determine your profitability, right? Because everybody could be a great technical analyst, but not everybody could be a great trader, right? So, and then not everybody have control over the emotional passive trading because, the habits that we've developed over time throughout our regular lives is completely polar opposite to what you need for trading. And some people can't even get over those habits, right? However, the plan that I've devised is able to bypass that, right? So think of it as putting yourself in a situation where you have to consciously, because when you make mistakes, a lot of the times it might be unconscious, right? But following this plan, you have to consciously choose to make that mistake that's going to negatively impact your results and negatively impact your trading journey, right? So our goal as traders and as people that is pursuing, trading success with this is simply to follow the plan, right? Read the plan, right? The goal is not focused on the outcome. The goal is focused on following the process of this plan, which is fully in our control, right? And the plan is going to do the heavy lifting, right? It's going to put us in a position where we don't have to do a lot of the thinking in the moment. Because a lot of the times when you're in the moment, placing the trades and making decisions, and you're watching the candles move, and you had to make that split second decision, that's when you would make mistakes, right? And this is just simply to avoid making those mistakes, right? So drop a two in the chat if you follow and you understand, what I basically just explained. Okay, good. Because the technical analysis part, that is the exciting part, right? But you need to be able to follow protocol in order to see the fruits of your labor. Because for example, right? For example, we all know that I send very good signals, right? I've been sending very good signals for months. However, most people would not be able to bear the fruits of those signals because they aren't able to execute it consistently how it's supposed to be executed because they don't have the plans and the protocol in place to do that, right? to see the outcome in the long run. So I've written it down. However, I organize it in a different way. So what I'm going to do, this group chat that we have is always going to be there where we could practice and have feedback. Because after you learn the technical methods, it's just about practicing it, right? Besides the technical methods, your goal is to practice the good habits of a profitable trader while executing the technical methods, right? So let me just send this in the chat. One, two. All right. So I'm gonna share my screen. And by the way, so this strategy that we'll there's a couple strategies, right, that I use, but the ones that we're focused on in this bootcamp is geared towards Euro USD. It's my favorite strategy, and it's time based, and it's we have a specific entry protocol, and is I like it, right? But we'll get into that afterwards, right? Um, and we'll even do some, if we see any live trades to take, we'll take it, right? Okay, so I'll drop this in the chat. So basically, you can see my screen, right? Drop out one in the chat if you can see my screen. Okay, cool. So this is it, right? And even though this is here, you know what I mean, you can make notes of it, but you want this to become subconscious, right? These are what we call habits, because you know habits is what makes the trader. Whenever you find yourself making an impulse decision in the market and you don't know why you jumped into that trade, or you don't know why you over risked on the trade until like it's too late, because you know sometimes you end up taking a trade and it's only after a few minutes when you're already in the trade you look back and you'll be like, damn, why did I do that? You know what I mean? Because first of all, it wasn't the strategy that you're using, or it wasn't the risk that you intended to use. You know what I mean? So when you make those decisions, that is simply you practicing on the bad habits that you've developed over time, right? Because trading poorly, trading poorly is a habit that is practiced. Every time you over leverage, every time you don't follow your plan, every time you didn't pre-plan your trade, every time you trade outside of your session, all of that is you practicing a bad habit. And maybe you might get lucky now, but at the end of the day, it's a part of you, and it will negatively impact you later on. However, you could change that by practicing good habits, right? In all areas of life, and also trading. So I've created this. I have a couple plans here, but we are all going to practice this together, right? Every day, and alongside our strategy, because our strategy is nothing without the plan. So we have the psychology plan, we have the risk management plan, and then we have the execution plan, right? So basically, limit the number of trades per day, right? Objective, maintain discipline, and avoid emotional. I wrote all this, but I let ChatGPT nice it up for me, but I wrote it on the paper, right? So the objective is to maintain discipline and avoid emotional trading, right? Committing to only taking 1 to 2 trades per day, to prioritize quality over quantity, to prevent over trading, which can lead to impulsive decisions and avoidable losses. So the idea is whatever account you decide to use while while on this journey, while using the strategy, right? While practicing the strategy, the time that you dedicate to do it, you're only allowed to take 1 to 2 trades per day, right? Now, taking 1 to 2 trades per day is a way to bypass the negative emotions that could sneak up on you during trading, right? Because if you could only take 1 to 2 trades per day, it would automatically stop you from over trading, right? It would automatically stop you from taking lower quality trades because you know you only have 2 shots. So you're gonna have to make those two shots count, right? Um, and then it would keep you stabilized because after the third trade, what tends to happen is the quality of your decision making becomes lower and lower, right? And that's just from what I've observed, and that's just from my experience, right? So in order to practice a good habit for this system to work efficiently, we stick to 1 to 2 trades per day, right? And you should read this plan, and your goal is to follow it. Now, step 2, if you win the first trade, call it a day, right? Now, why call it a day after you win the first trade? Because what tends to happen is once you win in the market, just like how you could revenge trade up your size if you lost, as well as when you win, sometimes you would become overconfident, right? And it would affect your decision. A win could affect your decision making, right? And because we want to make this smooth, we don't want to make this pressured. We want to make this efficient, right? We don't want to be in a rush, and we want to make this healthy, right? So if you're able to take that trade, that first trade, and that first trade is a win, you already won. 99% of traders for the day is going to lose. So if you win that first trade, you're done for the day. Move on with your life. Come back tomorrow, right? Ending the day not in a loss is a win. You winning that first trade and not jumping back in the market, you already won the day. However, yes, the first trade might be 1 to 3, and then you could lose the second trade and you'll still be in profit for the day. But this is over time. You could change this later on, but for now, this is what we stick into, right? If you win the first trade, and I'm going to be sticking to this as well. Like this, all of this is a challenge, right, for us to do together. And as long as you're able to do it over the next 30 days, we will see how it affects your trading style, right? How it affects your trading current. So, objective is to reinforce confidence and protect profits, right? If your first trade is a win in your trading session, this helps secure your gains and prevent overconfidence and greed and eroding profits, right? Now, loss management, what I have for this. Handle your losses with a structured plan. If your first trade is a loss, you're allowed to take a second trade, right? You're allowed to take one more trade. This helps maintain composure after a setback and avoid chasing losses, right? So if the first only we only take 2 trades a day if the first trade is a loss, right? Our risk to reward is 1 to 3. So meaning if we win Monday, we win 3R, right? We have to lose Tuesday, Wednesday, and Thursday in order to get back to break even, right? So one winning day covers 3 losing days. No, well, it's not 3 losing days because if we lose twice in one day, then Yeah, but you understand what I'm trying to say, right? One winning day covers two losing days minimum, right? Um, right. So only consider winners 3R or higher, ensuring profitability with a strong risk to reward. Only consider a trade successful if it achieves 3R. This strategy ensures that even with a low win rate, you remain profitable, right? So what does that mean? Well, when we're executing this trading strategy and this plan, once we set our stop loss and we set our take profit, we only accept a win or a loss. We don't accept break even. We don't accept anything less than 3R. I've made this so that it's fixed, right? Little to no micromanagement. We just have to execute with confidence. Later on, you could make the adjustments if needs be, but for now, we risk one for three, and it is what it is, right? Because what tends to happen is if you're staring at the charts and you try to micromanage the trade, you would exit the trade too early for a small win when it could have been a big win, right? And all of that messes with the math of profitability because profitability is math, right? Profitability is win rate and risk to reward, right? And those numbers need to be balanced in a profitable way. And that comes back to you following a plan, right? And I appreciate the feedback, right? Just if you could give me feedback, I appreciate it, right? So number 5, right? Leave the charts once a trade is set. No, you might hear me saying or using the term set and forget. Set and forget is not a technical trading strategy. Set and forget is a psychological trading strategy, right? And that is what I mean by number 5, right? So the objective is to prevent emotional interference. Explanation: once the trade is active with a set take profit and a set stop loss, step away from the chart. This reduces temptation for micromanagement, which where else? Which could lead to early exits and poor decisions. No, this is the thing. You could think clearly when you're not in the trade. You could think clearly when you're analyzing previous data. But once you're analyzing an active candle that is moving up and down, it is not as easy. It is not as easy to accurately have the same composure as you would if you're analyzing historical data. And you're not the same person when you're in a trade than when you're out of a trade, right? So the best way to manage your trade is to understand what's in your control. What is in your control is one, you execute the trade using your strategy and your entry and exit plan, right? That is in your control. You executing the trade following your plan, right? Set your stop loss, set your take profit. What is not in your control is the outcome of the trade. And a lot of people try to control the outcome of the trade, which messes with the numbers, right? You have to understand that the market controls the outcome of the trade. Every individual trade, the market controls the outcome, right? But over a series of trade, if you know that your plan is profitable, then you know in the end, you're going to come out on top, right? So once you're in the trade or the trade is set, don't look at it until the trade is completed. This is called set and forget, right? You don't look at your active trades. You look at the trades Once you place a trade, if it hits stop loss, then you're out, right? If it's hit take profit, then you're out. You accept it's either one, right? Now, accept the risk and avoid micromanaging the trade, right? Build trust in your strategy. Accept the inherent risks in each trade and refrain from making adjustments once the trade is set. Micromanaging is often derived from fear and can disrupt consistency, right? So micromanaging could be you see the trade go up, you decide to close early, close half, most stops to break even, you decide to enter another trade. It's like you you plan the trade, but once the trade is put on, you want to add plans to it. You know, don't micromanage the trades because that's a negative trading habit, right? Unless you have a plan in place. You see, it's important that you make the decisions before you're in the trade because once you're in the trade, you're impaired, right? That's just my perspective. Um, a minimum of 3 profitable trades out of 10, right? Set realistic, manageable goals. Explanation. Aim for 3 out of 10 trades to be profitable while following your plan. This maintains a realistic expectation, reduces the pressure, and promotes adherence to your strategy, right? So, when you're trading, you might be thinking to yourself, you need to win this trade, you need to win the next trade. Every trade you need to win, right? You have to change that way of thinking and just think of it as you are going to execute on your edge and your trading strategy. The outcome is the outcome. You cannot control the outcome, right? What happens happens. You do not need to know what happens next in order to make money, right? However, following this system, you only need to win if you're able to risk the same amount for every trade and you're able to set your TP as 1 to 3 fixed. You only need to win 3 out of 10 trades to be in profit, right? So you execute this system on with a 10 trade duration, right? So you commit to doing the same thing for 10 trades and with your confidence, right? Because obviously our strategy should be good enough for us to win 3 out of 10, right? For us to be profitable. Now, obviously, if you don't follow the previous trading habits and you don't follow protocol, that 3 out of 10 is not going to matter, right? You only win 3 out of 10 to break even if you follow everything else, right? And even if you don't win 3 out of 10 and you win 2 out of 10, then you would be in a small loss, right? So that is the um, psychological trading plan that I've developed for this system that we're going to follow. I would like whoever is comfortable to give me some feedback on if they've experienced things like this or if they think this is going to help them or if they've learned something new. Just give me some sort of feedback. If you would like to, just drop a one in the chat and I'll call your name and you can unmute yourself. I'll give you like a few minutes to do that. But if nobody want to give feedback, then it is what it is, right? But participation would be helpful. I'll give it a few seconds.
So I have feedback. So basically, I'm stuck on the 3 out of 10 trades to win. So basically, if you're risking, let's say 1% and you win 3 trades at 3%, so that's 9% gain, and you lose 7 trades, so you'll technically be up 2%.
Okay, so basically, right? You have three. You have three shots left, right? All of those three shots gives you 3R, which is 9. So you positive 9 plus the 3 that you didn't lose, right? So that's 9 plus 3 is 12, which would put you 2R in profit.
All right. I just wanted to make sure my math was right.
Yeah, it was right. All right, cool. All right. So right now we're going through the risk management plan, right? Now I have these. I sent the trading psychology plan in the group chat. Read that. Read it. Memorize it. Commit to it. Right? Your only job is to follow the plan. That's your only job. Just follow the plan. I've used this plan and I've seen it work. Right? Okay, so before before I go through that risk management plan, let me just have a quick look at your USD, right? And we will definitely get into the technical parts, right? Because that's where we'll be spending most of our time. But we have to use the risk management in alongside the trading psychology and then the technicals in order to see profitability, right? But we'll be practicing the technicals. Right, so let me drop the risk management plan in the chat. So this is basically a challenge, right? All of this is a challenge and an opportunity to build good trading habits. And you would reap the fruits of the outcome, right? Now I've made this as simple as possible to avoid um to avoid so that this could just be on autopilot, right? Because the less you have to think about and the more you could just follow protocol, then the easier it will be for your trading, right? Now, over time, your goal is to follow this plan for, let's say, 30 days, right? Or let's say for a minimum of 30 trades. If after, and obviously backtest it, but if after you've gained the experience and you familiarize yourself and you've learned and you've built the good habits, later on you could obviously make your little tweaks and stuff to improve, right? Now, these plans as well, even though I'm teaching you a scalping strategy, right, for your USD, we also have a trade swing trading strategy and day trading strategy. that, I might be prepared to teach this group later on, right? But the strategy that I'm teaching, it could be applied on any time frame. I'm just showing you how to use it on your USD at this specific time because it works very well for me, right? And it's easy to follow. So, risk management plan. Basically, we're going to use fixed risk, right? Maintain consistent risk across your trades. Use fixed stop loss of 5 pips with a target of 15 pips. 1 to 3R risk to reward. This sets a reliable baseline for risk management and profitability, right? So we've simplified risk management. Every trade for this, obviously, if you're swing traded and you're not using it for this specific bootcamp, you would adjust your risk. But for this specific trading system that we're following and the technical method that we're about to follow, all of the trades that I've taken and back tested, the risk is usually no more than 5 pips, right? So we're just gonna keep it fixed at 5 pips so that's easy to follow. So we know our entry and our stop loss is always 5 pips. Our target is 15 pips, right? Even if the zone may be smaller than 5 pips, we risk 5 pips, right? Our target is always 15 pips, and that just simplifies the risk and the risk to reward, right? So for example, I'm using a 100K account. If I'm risking 0.5%, right? Because I could either choose to risk 0.5% or risk 1%, whichever one I decide to go with, I have to stick with it until, right? For the numbers to work. But if I'm on a 100K account and I'm risking 0.5%, then I know for every trade that I take, I just use 10 lots, right? Stop loss hit on 10 lots, that's $500. Take profit hit, that's $1,500, right? If I want to risk $1,000 on a 100K account, then I just use 20 lots, right? And that just keeps it very simple. Target options. Scale up your gains with experience. This is what I was talking about with experience, because a lot of the trades are going to, for this system, is going to run 1 to 4, 1 to 5, even higher. But to begin, we'll just keep it at 1 to 3, right? And then over time, with confidence, we could go for 1 to 4 and then 1 to 5, right? Now, commit to a minimum of 10 trades. What does that mean? Is that once you decide to trade whatever account you're trading, you must be able to take 10 trades using the same risk, right? Gather a sufficient sample size for assessing performance. Complete at least 10 trades while following the strategy. This will help elevate your trading consistency, effectiveness, and meaningful number of trades, right? So you can hear me, you can still hear me? Drop a one in the chat if you can still hear me. So I think my headphone died. Right. So basically, right, you need to allow the strategy to play out, and you need to allow the basically, yeah, you need to allow the strategy to play out, because we don't know which trade is going to win and we don't know which trade is going to lose. You have a sample size of 10 trades. You need to win 3 out of 10 minimum. You don't know if those 3 is going to be the last 3, right? So you need to give yourself at least 10 trades. That's a requirement. So whether you decide to risk, whatever risk amount you decide to use per trade, the account need to be able to survive 10 trades minimum, right? Because I think that's enough to allow the odds to play out in your favor. Set and forget, like I spoke about previously, prevents emotional trading and over trade management. We already spoke about that. Once the trade is placed, avoid making adjustments. This reinforces you trust and helps prevent impulsive decisions. All right. So what you could do, you could place a trade in view alert on your stop loss or your take profit once you enter the trade, right? And it's a good habit, like instead of sitting down and staring at the trade, sit down and stare at other trades, but for this trading strategy, once you enter the trade, we look at that market after the trade is exited, right? Trade only quality zones, meaning once I teach you the technical method, we're gonna have quality zones and zones that is not of high quality. Because we only have 2 shots a day, we have to make them count, right? Because if we take 2 trades and we can't execute any more trades for the day, and then now we see the quality trade, we're not going to be able to allow we're not going to be allowed to execute the trade, right? Right. So if if in a specific circumstance the zone is more than 5 pips, then you adjust your lot size to ensure that you was risking half a percent of your account, right? So if the zone is more than 5 pips, then you would lower your lot size to equal half a percent, right? Now limit orders only, right? Because market executions typically would make you chase the price, because if the market is moving up quickly or moving down quickly, you would want to chase behind the market with a market execution, right? Limit orders is where you pick the price that you want to enter the trade at, and you're not negotiating with the market. This is what you want, and as the market either fulfills your objective or not, right? So limit orders only, avoid emotional decision making, right? Because all of this is designed to protect you from yourself, right? Once a qualified zone is identified, once we find a zone that fits our plan, we set our limit order and we use the set and forget principle. This reduces emotional trading interference and promotes discipline, right? Also, daily motivation, because sometimes you'd be so active, like you could get so consumed in this, and sometimes you fall off your path. It's important that you remember why you trade, right? Who you're trading for, you know, how this could positively affect your life, right? So stay focused and align your trading goals. Write down why you want to trade and remind yourself daily. This reinforces commitment and keeps you motivated during tough times, right? Now, I might say something that is very simple, just like this, and maybe you might choose not to do it, right? But remember, this here is an exercise to benefit you. So, regardless if you want to do it or not, you should do it because it's going to positively impact your trading, all right? So, number 9, we have consequence for breaking rules. Now, a lot of people, they don't set consequences for breaking rules, right? So it becomes easy for them to break rules, right? The habit of breaking rules is remains consistent, right? Now, I believe you should have a consequence for breaking rules, because when you break your rules, one, you're doing yourself an injustice, right? You're doing the world an injustice, because every time you break your rule, that's you taking yourself further away from your goal. And maybe your goal is to make a living for yourself and your family. So you breaking your rule is doing a disservice to your family as well, right? You breaking your rule is doing a disservice to all the years you spent learning how to trade, all the money you've invested and lost, right? Breaking your rules is doing a disservice to all of that, right? So we shouldn't just break our rules and, oh wow, it's just broken, you know? I believe that we should set consequences for breaking the rules. So in this plan that we're following, right? Should you break the rules, this is how we're going to go about it, right? Consequences for breaking rules, instill accountability, objective, instill accountability and discipline. Explanation. Before trading, right? Before trading for the week, before trading, or just have it in general on a piece of paper written down and signed by you, right? Before trading, write down a consequence for breaking a trading rule. Follow through immediately if you break the rule, right? So as soon as you're aware that you've unconsciously or consciously broken your trading rule, right? You execute on that consequence. I mean, first of all, you stop trading, right? So if let's say you decide to execute on a trade idea, and your trading plan suggests that you risk 0.5%, but you feel like the trade is so good, you decide to risk 1%. From the moment you click 1% and that trade is entered, and then you now become aware that you've broken your rule, you exit the trade immediately, you stop trading for the day or the session, and you execute on your consequence of breaking the rule, right? So some of the things that you could have as a consequence, I mean, everybody can have their own consequence. I'm curious to see what you would set, but these are some of the ones that I thought of, because these are some of the things that I do not like to do, right? This is what I don't want to do. So I won't break my rules because I don't want to have to execute on these things, right? So stop trading for the day and go for a 3 mile run, regardless of where you're at or the weather. Take a 3 minute ice shower, It could be either one, take a cold ass shower. Read 30 pages of a book. I don't like reading, right? But if I break my rule, then I know I had to go and sit down and read 30 pages, right? Or do 200 squats. If you like exercising, that doesn't count, right? If you like exercising, find an exercise that you don't like, because your consequence cannot be something that you do like, right? So drop a two in the chat if you're following. All right, cool. No, do not take the things that I'm sharing in this bootcamp for granted. It might seem very simple, but it is very effective, right? It is your job to simply follow the plan. Okay, let me see what else I have here. Okay, follow these guidelines, help build strong risk management approach, promoting consistency and long-term success, right? Now, my goal, right, is okay, let me stop share. Right. Right. So obviously, my goal for this focus group that we have here, right, is for one, we have accountability. We have accountability. We practice good trading habits together, right? We execute on a profitable trading strategy. And over time, I know that once everyone is able to follow through, it would result in a positive outcome for you individually, right? And for the group overall. I'm also going to be there's no rush, or there's no pressure as well, right? We're going to take our time and do this. We have to submit to time, we have to submit to patience, and all of that. Now, with that being said, I'm gonna end the call here, right? Now,